Well, that's with regards to, the jet engine technology that we are seeing, how you're increasing focus in this particular area. Now, coming to another critical piece is the order book. Now, FY25, if you look at the value, that's about 1.89 crore. With the street estimates in place, this is expected to increase to about more than 2 lakh crore, which implies about a 32 times of a book to bill revenue. So just want to understand on the overall revenue visibility forward for your business.
With this 97 LCA order, our order book now swells to 2.5 lakh crores. We were at 1.89, and this is roughly about 62,000 crores. So it comes to 2.5 lakh crores. And my estimate is this is a backlog of about 7 years every year with our growth of 9 to 10%. We are looking at a backlog of 6 to 7 years, which will take us into the next decade. And we have these different complexes executing this. For example, the helicopters are under the helicopter complex, so we are producing the ALH, the Dhruv, the LCH Prachand, as well as the variants of the ALH. That comes under the helicopter complex, and those factories are separate. The LCA, the Sukhoi 30s, the Dorniers, these are the fixed wing aircraft which are made at different plants. The Dorniers are the Hindustan 228, which is a civil certified aircraft, is manufactured in Kanpur. The Sukhoi 30s are manufactured at Nasik. The LCAs are manufactured both in Bangalore and Nasik. The HTT 40s will be manufactured at Nasik predominantly, 60 of them at Nasik, and 10 will be in Bangalore in the initial stages. So I think we have these facilities spread out across the country. These kind of capacities in these factories are already there. So this order book should play out in 7 years. So we keep adding every year to our order book in terms of new aircraft orders. And additionally, we have a steady order book coming in from the repair and overhaul task. For all the aircraft that we deliver, on an average, we do about 15,000 crores annual ROH task, which is the repair and overhaul task. In fact, it may go up also as the number of aircraft increase with the armed forces. So this is the kind of order book and the outlook that we have over the next 6 to 7 years.
Dr. Sunil, with the order book that you're mentioning right now, what is the kind of estimated revenue visibility you hold? That is, the number of years of revenue that is covered by the current order book, because your FY26 guidance is 8 to 10%. Double digit is what you're expecting in FY27 as execution ramps up. So what should the investor watch out for, and the margin trajectory on the same?
I think on the margins front, we hold similar numbers. Our EBITDA numbers, whatever we have been in the last, whatever we have had in the last 2 or 3 years, those EBITDA margins we will maintain. And the production, as I said, will be, the LCA production will be perhaps dictated by the engine availability, but 9 to 10% growth is what we are looking for. And the EBITDA margins will be maintained over this period. So we don't see any downturn. If you remember, last year we had a double whammy where we could not deliver the LCS. At the same time, we had the grounding of the ALH fleet also. But we could still make up the numbers because of the ROH, the repair and overall order book that we have. And we have maintained the EBITDA numbers. So I think going forward, we are confident that we will be able to maintain the earnings and turnover consistently.
Okay, Dr. Sunil, beyond the Tejas program also, if you're looking at, there have been quite some bit of important developments that we are taking in context for HAL, that includes the AMCA program as well as helicopters as well. Just want to get your overall take, the key projects and focus that you have for the next 5 years or so.